The Schiff Show.
Stock market in the U.S. continued to grind higher today, although I still believe that this is a bear market rally. The Dow added a little better than 40 points, NASDAQ up about 47, so a bigger percentage gain there. S&P up about 13 points. This following the release of the March non-farm payrolls numbers, aka the jobs report. There was a lot of hope that we would see a rebound in the month of March, because remember, in February, they initially reported just 20,000 jobs created, which was well short of what had been expected. It was probably something close to 200,000 jobs. And the consensus for March was for 170,000 jobs. And we actually got 196,000 jobs. That's the first look. So that is what, 26,000 jobs better than had been expected. The February number was revised upward, but just to 33,000. And I think I remember when this number first came out that there were a lot of naysayers that were saying, oh, this is crazy. There's no way this is true. Let's wait for the revisions. Well, we've got a revision, and all we did is revise it up to 33,000. So it seems like the number was legitimate, although we did have a rebound in the month of March. But I mean, the rebound, 170,000 jobs is not a lot of jobs, considering how few jobs were created in February. In fact, if you average the 2 months, it's a pretty weak number. The official unemployment rate, that held steady at 3.8%, but the labor force participation rate, which I know a lot of people have been encouraged because they've seen that number notching higher, it dropped back down 0.2 from 63.2 to 63. So that's some weakness there. Also, if you look at the manufacturing jobs, they were looking for a gain of 10,000 jobs. Instead, we got a loss of 6,000 jobs, and they took the February gain, which was originally reported at 4,000, and we only gained 1,000. So the markets were looking for an improvement over the original estimate for February. Instead, not only did we take February's number down, but instead of improving, we actually went in the other direction and lost manufacturing jobs. And if you look at the average hourly earnings, they were looking for a gain of up 0.2, and we got half that of up 0.1, and that is a sharp slowdown from the gain the prior month, which was up 0.4, which was better than had been estimated at the time. So now you average them out, and again, we're not getting much in the way of earnings growth, although we are seeing a rise in the cost of living. The average work week, though, was up. It ticked up from 34.4 hours to 34.5 hours. Nonetheless, most of the coverage of the jobs numbers was that it was a good report. It was better than estimates, right? Because they were looking for 170 whatever, and they got 190 something, so it was better than estimates. But again, the wage growth was less than estimates. We lost the good-paying jobs, right? The manufacturing jobs. Those are the jobs that we need, and we added a lot more of the low-paying jobs. In fact, if you look at the composition of the jobs, better than half the jobs created were in education and healthcare. And of course, a lot of those jobs, some of them, of course, are government jobs. Many of these jobs are low-paying jobs in those sectors. And of course, the fact that we have more people employed in healthcare may not be a good thing if we're sicker and therefore we need more people to take care of us. That is not necessarily a good sign, to the extent that we need more people to manage our healthcare, because we're not as healthy, because we are a sicker population based on poor diet, lack of exercise, whatever. Also, looking at leisure and hospitality, that was another big gainer. There's your waiters and your bartenders and hotel maids and stuff like that. So you take all these low-paying jobs, and that's better than half of what was created. And then if you look again at the household survey, according to that survey, we actually lost 190,000 full-time jobs, and we only gained 60,000 part-time jobs. So the household survey was, decisively weaker than the establishment survey. So all in all, I do not see a strong jobs report here. We did get a lower than expected number for initial weekly jobless claims. In fact, the number was the lowest it's been since 1969. So that trend continues. But remember, this trend was in existence long before Donald Trump became president. We were getting these drops in unemployment claims throughout the Obama administration, and we were getting a decline in the official unemployment rate. Although the unofficial number, the U6 number, is still above 7%, which is much closer to being accurate than the 3.8%. And, unemployment rates of greater than 7% historically are considered high. And of course, even that number, it sugarcoats it because it only counts discouraged workers who have been discouraged for under a year. If you've been unemployed for over a year and you've given up looking, you're no longer even in that statistic. So when you go back and look at the unemployment statistics from the 70s or the 80s, those numbers included all the discouraged workers, no matter how long they'd have been discouraged. So again, the numbers that Donald Trump is tweeting about and touting as evidencing what a great job he's doing are the same phony numbers that Obama was hiding behind and which Trump was calling him out on. Of course, the government numbers is not the only area where Trump is a hypocrite, because today in an interview, not only was Donald Trump advocating that the Federal Reserve cut interest rates, right? But he not only wants them to stop quantitative tightening, right, which is shrinking the balance sheet, and the Fed has already said they're going to stop. They're going to stop, I think, at the end of the summer. But not only does Donald Trump want the Fed to immediately stop quantitative tightening, he actually called for quantitative easing. He said the Federal Reserve right now should be doing quantitative easing. Now, first of all, Donald Trump is on the one hand saying we've got the greatest economy ever, right, in the history of the country. Yet he's also saying we need the same type of stimulus that we had during the Great Recession, right? This economy is so strong, yet it needs the same type of help that it got when it was as weak as it's been since the Great Depression. Now, which is it, right? You can't have your cake and eat it too, although I guess that's what Donald Trump constantly tries to do. Either the economy is strong or it's not. If we need life support, right, then it's not strong. But I don't think this is just hypocrisy here. And again, it is hypocrisy because Donald Trump was a big critic of quantitative easing. I mean, way before he was running for president, when the Fed was first doing QE, he said it was a mistake. He said this is going to lead to inflation, that the Fed shouldn't be doing it, and he was right. And in fact, it wasn't that it was going to lead to inflation. Quantitative easing is inflation. It is a euphemism for inflation. It is inflating the money supply. It is printing money and buying government bonds. That's what inflation is. You're expanding the money supply. And the way the Fed does that is quantitative easing. But they don't like to call it inflation, so they call it quantitative easing because inflation sounds bad. At least it used to sound bad, but quantitative easing, sounds good. But Trump criticized it, and he was right to criticize it. And it did lead to rising prices, except it led to rising asset prices, so far anyway, and it prevented consumer prices from falling, which would have provided a lot of relief for a lot of consumers who were struggling with falling real wages and a loss of their wealth. Lower consumer prices would have been some aid that would have been appreciated, and obviously the Fed prevented prices from going down and thus robbed consumers of the benefit of being able to buy more stuff for less money. And again, of course, prices did go up by more than the official measures. That's part of the flaws that are deliberately built in to the CPI. But when Donald Trump was a candidate for president, he was accusing the Federal Reserve of doing political things to artificially prop up the economy while Barack Obama was president to make the numbers look better, to make the economy look better. And of course, what the president was referring to was quantitative easing and also keeping interest rates low. He said we had a big, fat, ugly bubble, and that bubble was working to the benefit of Obama in that it made the economy look better than it really was. And he was warning about the dire consequences, the dire economic consequences that were waiting in the long term as payback for what the Fed had done. And of course, candidate Donald Trump was absolutely correct in that criticism. Now, as president, he is calling for the Federal Reserve to do exactly what he criticized the Federal Reserve for doing when Obama was president. But now he's president and he wants the Fed to do political things because he is the beneficiary. Because now it's the Trump economy, so it's the Trump bubble. And so he wants the bubble to get bigger and bigger. And so he wants the Fed to make the same mistakes under his administration that it made under the Obama administration, and he no longer gives a damn about the long-term consequences that they may be negative, because the furthest into the future that Donald Trump can now see is the 2020 election, and he wants a second term, which again means that Donald Trump is not the statesman that I had hoped that he might be when I voted for him. He is the very politician that everybody was voting against. He is part of the swamp. He is only concerned about his own reelection. He may have a different style than other politicians, but at the end of the day, when you peel back the onion, that's what you see. He is all about politics. It's all about his own career. It's all about making the economy look better simply so he can get reelected. And I think, again, this is more than just him being hypocritical. I think it also exposes the lie. I think when Donald Trump talks about how great the economy is, I don't think he believes it. I think it's just talk. I think it's just a show that he's putting on. I think it's all public relations. I think deep down, if you could get the president in a room and he could talk in confidence, I think he would admit that the economy is not doing well. I think he knows that it's the same big, fat, ugly bubble that he called out when he was a candidate. It's just that he wants that big, fat, ugly bubble to get bigger. He doesn't want it bursting before the 2020 campaign. That is why he is calling on the Fed to do quantitative easing. That's why he wants quantitative easing. That's why he wants rate cuts. Because I think the president knows that if the Federal Reserve simply waits for the recession to start before doing that, because that's exactly what they're going to do. In fact, I was watching on CNBC today after the president came out and said this. Of course, they're all shocked that he said it. Doesn't surprise me at all. It makes perfect sense. But they're all now talking about QE4, right? Well, I've been talking about that for years, right? I knew QE4 was coming when they launched QE1, right? I said, they'd have more QEs than Rocky movies. Well, we had Rocky 4. That was the one where he fought Drago. Apollo Creed died right at the beginning because the Russian hit him so hard he killed him. And so then Rocky took revenge and won. I think that was probably one of the worst of the Rocky movies. And QE4 is not going to be any better. Whenever you have a sequel, they're always bad. And QE4 is going to be real bad. And it's not going to produce, I don't think, a big boost to the economy because of lifting asset prices. I think it's going to sink the dollar. That's going to drag down the economy. We're going to have stagflation. But Donald Trump, I don't think thinks that way. I think he thinks that, well, if the Fed just preemptively goes back to QE, we will delay the onset of that recession. And he probably is right. I mean, if the Fed were to go back to QE, the actual recession may not start until after the election, although it still might. I mean, if the dollar just tanks immediately and prices really start to shoot up, oil prices today, we're now over $63 a barrel, about 63.20 something. We're up better than $1 a barrel. So we're now up better than 40% on the year. In the price of oil. And this is, another example of the president trying to have his cake and eat it too, because he has been very critical of OPEC in particular for rising oil prices. When the price of oil goes up, he starts tweeting about it. He tries to, tweet it down and beat up OPEC and about how we have to have lower oil prices. Well, if he wants lower oil prices, but he wants the Federal Reserve to debase the dollar by doing QE right now, well, if oil prices are over $60 a barrel, $63 a barrel, now when the Fed is shrinking its balance sheet, right, and this is deflation, right? Imagine what would happen to the price of oil if the Federal Reserve did what President Trump wants them to do. Went right back to QE. Oil prices would skyrocket above $100 a barrel very quickly. And then of course the president would want to be critical of rising oil prices. Well, oil prices would be rising because the Fed did exactly what he wants them to do, which is create more inflation, print more money. Now, again, that is going to happen. But left to its own devices, the Federal Reserve would probably wait until it sees the whites of the recession's eyes before going back to QE and going back to zero. I mean, that's coming, right? But I think what Trump wants is he wants the Fed to start that now. Because if the Fed waits for the recession to start, the recession is not going to be over before the election. And if the economy goes into recession, well, now what is the basis of Trump's campaign for reelection? It's supposed to be keep America great again. Well, if America is back in recession, well, who's going to want to keep that? Right? I mean, and if the economy is in recession, that means that the growth under Trump's first term will probably be less than the GDP growth under Obama's second term. So he won't be able to claim that the economy is doing so much better on his watch than it was under Obama's watch if the GDP is actually, gone up less. And of course, if the recession begins before the election, unemployment's going to spike up, which means that when Trump runs for re-election, we'll have a higher rate of unemployment than the one that existed when he was sworn into office. So if he's presiding over a recession, an increase in unemployment, and obviously we're also going to have an increase in inflation as measured by the CPI, prices are going to be going up. So if we have higher prices, higher unemployment, a weak economy or recession, what's his campaign based on? I'm better than socialism, right? I don't know that the American public is going to buy that. I think that Trump recognizes this, and that's why he's out there calling for QE. That's why he wants rates to be cut. It's because he knows that it's all BS. When he's out there talking about how strong the economy is, he knows it's not strong. That's probably the difference between Trump and a lot of people in the financial media. They actually believe him. They actually believe the economy is strong. So they're shocked when he's out there calling for QE. They still don't understand that the only thing this market has going, the only thing the economy has going, this phony economy, is artificially low interest rates. The only thing that's propping us up is that the Federal Reserve has got a massive balance sheet. And they don't understand that it's going to have to ramp it up again, whether or not it acts preemptively before the next recession or after it starts. The balance sheet is going to get much, much bigger, and we're going back to zero. It's only a question of when we do it. Now, of course, what Trump is positioning himself to do is blame the Fed, right? If we do go into recession, he's going to say it's the Fed's fault. Right? After all, I had to deal with rising interest rates. Obama had rates at zero. I had to deal with quantitative tightening. Obama had quantitative easing. But at the end of the day, interest rates are still much lower under Trump than they were before Obama was president. He's got lower interest rates than Bush had, or lower interest rates than Reagan had, or Carter, or Clinton, or any other presidents, right? Interest rates are still very low, and the Fed still has an enormous balance sheet. So he can't have all this and claim that we have the greatest economy in the history of the country when you're trying to say the reason it fell apart was because interest rates weren't as ridiculously low as they were under Barack Obama. Now, also, another thing, too, I mentioned that Donald Trump had already nominated Stephen Moore to be on the FOMC, on the Federal Reserve Board. But now he's also nominating Herman Cain to join him. And of course, Herman Cain 999 ran for president, the pizza guy, although he actually has some Federal Reserve experience, which is something that Stephen Moore doesn't have. So maybe he's not as crazy an appointment as far as, that aspect of it. But, one of the things that these guys have in common, both Steve Moore and Herman Cain, is they both come out publicly and say they favor a gold standard, right? And so you might think, wait a minute. Hey, does this mean that Trump wants a gold standard, that Trump is trying to put more or Kane on the Fed to really reform it and get them to operate more like a gold standard? Not on your life. I mean, what Trump is talking about now is the opposite of a gold standard. If we were on a gold standard, there's no way the Fed could go back to quantitative easing. If we were on a gold standard, interest rates would have to go up. I mean, in fact, if we were on a gold standard, the government would have to cut spending dramatically. None of this stuff is what Trump wants to do. So Trump is not talking about putting Kane or Moore, on the Federal Reserve because he wants to go back to the gold standard. He wants them there because they're Republicans and they're partisan and they're his friends, and they understand, I think, that the Federal Reserve has inflated a bubble, just like Trump, and their main goal at the Fed will be to keep the party going long enough to reelect him. That's the problem, right? They only care about the politics. They don't care about the long-term consequences. Now, of course, the Fed, the other guys on the Fed, they don't know any better, probably. These guys are probably dyed-in-the-wool Keynesians. They have no idea that these policies are bad. I mean, I think Stephen Moore knows that what the Fed did was bad, right? It's just that he also knows that if they stop doing it, the hangover is going to come in. Because anybody who understands the mistakes that the Fed made knows that eventually we're going to pay the piper. But I'm sure that Stephen Moore wants the piper to be paid when there's a Democrat in the White House, not a Republican. And probably the same thing for Herman Cain. See, I just want to stop digging the hole deeper. I want to start doing the right thing as soon as possible. And I do believe that this is all going to blow up on the Republicans because I think they're going to try their hardest to prevent everything from collapsing before the 2020 election. And I don't think they will succeed, no matter who they put up on the Federal Reserve. But even if I'm wrong, and even if the Republicans manage to keep this crazy party going for another 2 years, long enough to reelect Donald Trump, there is no way that Trump is going to finish a second term without everything imploding. And of course, if it implodes on his second term, it will implode in an even bigger manner than if it does it on its first. Because that's the one other thing that I know for sure. The longer this takes to happen, the worse it's going to be when it does, right? The bigger the bubble, the bigger the pop. The more debt we take on to finance the phony boom, the more we're going to have to pay when we have the inevitable bust. And of course, the longer Trump is in office, the longer he's in control, the more blame is going to be placed on his on him. So, obviously he's going to get blamed for whatever problems happen if they happen before the 2020 election, but he's going to get blamed for anything that happens in 2021, 2022, 2023 if he is still in office. And again, if we kick the can down the road that long, if we don't get the day of reckoning until Trump's second term, well, then forget about it. I mean, then things are going to be so bad. The dollar collapse is going to be so horrific. The inflation is going to be so horrific. And of course, by then, the opposition would have really galvanized, and Trump will take down the free market. He'll take down capitalism, and the socialists will roll in with their full agenda. Let's get rid of the Electoral College. Let's let prisoners vote. Let's let 16-year-olds vote. Let's make sure that we never have another Republican president again, or that we never have anyone who believes in capitalism. And let's have all these government programs, and that's it. So I think that the best shot we have is for it to hit the fan before 2020, get rid of Trump, get rid of the Republicans, let the socialists come in, let everything implode quickly so people see just how bad socialism is, and get a big, horrible belly full of it so that they could puke it all up by the 2024 election, and maybe we actually have a chance of real reform. And in the meantime, hopefully the Supreme Court can save us somewhat from all the lunacy and all the unconstitutional bills that are going to be passed by a socialist Congress and signed by a socialist president. One, again, example of this, we got Amy Klobuchar of Minnesota with Chris Coons of Delaware. A couple of Democrats have introduced legislation, which is obviously going nowhere, but is obviously part of Klobuchar's political campaign. But again, this is an example of the nonsense that the left is going to be selling. But she's got a plan to require employers to pay into a pension for all their workers at a rate of 50 cents an hour, which basically is like an extra 50 cents an hour to what you're paying somebody. So if you're currently paying somebody $10 an hour, well, you'll have to, pay them $10 an hour plus 50 cents an hour, or, $10.50. The 50 cents would go into a pension. Now, there's no mention, I read about it. It doesn't have a limit where it only applies to larger employers. I think it applies to every job. So if you hire just one guy, two guys, you still have to put money into the pension. And I think after a certain amount of years of employment, the number goes up to 60 cents. I think maybe that's as high as it gets. But this is something that the government is going to require employers to provide. And of course, the idea is that the employee is getting something for free, right? Hey, vote for me and I'll force your employer to give you this pension, right? He's going to just give you 50 cents an hour, right, for free, right? Vote for me and I'm going to make your employer give you a raise. Only that's not the way it works, because the employers are not required to give anybody a raise, except if you're at the minimum wage, right? If you're already working a job, right, you're getting paid minimum wage, and now your employer's got to give you 50 cents an hour extra, right? Well, he has no choice. Either he gives you the extra or he fires you, which in many cases he may choose the latter, right? You may get fired because your employer doesn't want to pay the 50 cents. And it's not about not wanting to pay it. It's about you not being worth it, right? Ultimately, you are worth what you are paid, right? That's how the free market works. I talked about that on my last podcast when I went over the nonsense about the gender pay gap, right? If there's any gap at all, it's because women, right, are worth less than men, and that's why they're paid less than men in money. Now, many of those women may make up the difference, but because they are being compensated in ways that are non-monetary. They're getting more flexible work weeks. They don't have to travel as much. They get to take more time off. But whatever it is, I mean, the only fair wage is the wage that you earn in a free market. That's what's fair, right? Because the free market doesn't care what gender you are. It only cares how productive you are. And in a free market, you're going to earn what you're worth, right? One way or another, whether you get compensated in money, fringe benefits, or other non-monetary compensation, the market is going to clear. There is lots of competition among employers for employees, and you get what you're worth. See, what the government tries to do in order to get the votes of the workers is it promises to give you more than you are worth. It basically promises to put a gun to your employer's head and force your employer to give you more than your work on the grounds that it's fair. And of course, nothing that the government compels at gunpoint is fair. What's fair is what two people freely agree to without any coercion. It's a voluntary exchange. But when the government coerces one party into doing something against their will, that's not fair. But the government does that in the name of fairness. And that's, of course, what it's doing here with this bill, where it's trying to con voters into believing that there's a free lunch, and that free lunch is you're going to get these pension benefits if you vote for us. But of course, what's actually going to happen if this law were to be passed and employers were required to pay 50 cents an hour into a retirement pension plan? What would this mean for workers? Well, it would mean that workers would have to see their pay reduced by 50 cents an hour, because the employer would be required to pay the 50 cents in pension benefits as opposed to cash. See, right now, the employer and the employee are free to negotiate, because if an employee right now wants a pension, he could tell his employer, hey, instead of giving me the money, why don't you put it into a pension or something and just reduce my salary? And if enough workers want to do that, most employers would oblige. If they don't have a pension, they would set one up. Of course, it does cost something to set these accounts up. And so that cost, of course, also has to be borne by the productivity of the worker. Because if you have a job, whatever you're paid needs to be covered by your productivity, right? You are making an exchange. When you have a job, you're exchanging labor for cash or benefits or whatever, but it's an exchange. And so you're giving your employer something of value, and your employer is giving you something of value. And what you give the employer has to be worth what the employer gives you. Otherwise, he's not going to make the transaction. So if an employer has to pay into a pension, well, then your productivity has to be high enough to allow it. And all the government does when they force one form of compensation, it just takes away the flexibility. So an employer is fine. So I'm gonna put 50 cents an hour into your pension. Well, I got to take 50 cents an hour out of your pay so that I have the cash so that it's covered by your productivity. Because if you were worth the raise, well, you would already have it, right? If you could get more money, you would have already asked for a raise. Because if your employer isn't willing to give it to you, well, you quit and take another job. And if you can't find another job at a higher pay, then that means you're not worth the extra money. You're getting a fair wage already. The government can't mandate higher pay. I mean, what if they just required the employers to put $1 an hour or $10 an hour or $50 an hour? You think you're just going to get it? Right? The government could just mandate everybody gets all these extra retirement benefits? No. The limitation is your productivity. And of course, if the mandate is so high, they're just going to mandate you out of a job because your pay won't be large enough for the employer to cut it in order to afford to pay into the pension. So all of this something for nothing is a scam. The workers are going to pay for it themselves. The government did the same thing with Social Security. Hey, we're going to have your employer pay half. The employer doesn't pay any of it. The employee pays all of it. Just because the employer writes the check, where does he think the employer gets the money? He gets it from the employee. That's why when you're self-employed, you got to pay both halves, right? They don't let the self-employed people off the hook. They don't say, hey, if you're self-employed, you only have to pay one half. No, you got to pay both sides when you employ yourself. Well, when you work for somebody else, you also pay both sides. You just don't write the check, right? The employer theoretically writes it, but if your employer didn't have to send that money to the government for Social Security, he could just send the money to you. The employer is indifferent to who gets the money. It's all part of the labor cost. So when somebody gets a job, their salary is just part of it. If the government requires unemployment compensation, disability, Social Security, workman's comp, all of those costs is money that is going to the worker, whether the worker gets it or not, right? It all has to be covered by the employee's productivity. And if all those other requirements weren't there, then the worker would get the cash. So all the money that the government is requiring employers to pay to the government is money that would have been paid to the worker, but for those requirements. The worker just doesn't realize it. He thinks he's getting something for nothing. He's not. Whatever the government puts in his right pocket, it's taken out of his left. The difference is there's a cost of the bureaucracy, so everybody is worse off as a result of this. And of course, we all lose freedom as well because people don't have the freedom to negotiate the compensation packages that they would prefer. They're stuck with the compensation package that the government decides they want us to have. One of the funniest things, too, about this plan is that in order to help employers afford it, right, the plan actually calls for higher taxes. On who? Well, on the employers, right? It calls for an increase in the corporate income tax and an increase in the top marginal tax rate for income. So many of the employers then who are going to be forced, in theory, to contribute this, they're saying, well, don't worry, we're gonna pay you a subsidy by raising your own taxes. Now, of course, obviously, there could be some employers who don't have corporations, they're partnerships, sole proprietorships, so a higher corporate tax doesn't affect them, and maybe they don't earn a lot of money, so maybe they won't be hit with the higher marginal tax, so they would get a little bit of a subsidy, and so to the extent they got a little bit of a subsidy, then they wouldn't have to reduce their workers' pay by quite as much because they could reduce the pay cuts by the amount of the subsidy. But of course, again, for the people on minimum wage, this in effect is an increase in the minimum wage, right? Because if the federal government mandates that employers put 50 cents an hour into a pension for each worker, that is an increase in the minimum wage. Because let's say the minimum wage is 7.25 an hour, and you got to pay 7.25 to the worker, but now you have to pay 50 cents into his pension. Well, you're actually paying the worker 7.75. So this is a roundabout way of increase in minimum wage, except the worker doesn't get the money immediately. He supposedly gets it when he retires at some point in the future. But again, it is a cost that the employer has to bear, and it simply raises the bar that much higher for people trying to get jobs who have minimal skills. If you can't deliver enough skills to cover the minimum wage plus the mandatory pension benefit, well, then you're not going to get a job. And if you have a job, you may not keep the job because you may be fired. So instead of getting a pension, you get a pink slip. Also, one of the other factors that was propping up the stock market all week, not just today, but all week, was constant tweets or leaks coming from the Trump administration or Trump itself about the prospects of this fantastic trade deal with China. I mean, we're closer than ever. Everything is going great. This is going to be the biggest deal ever. It's going to be the best deal ever. We're making real progress. I mean, how many times have we heard the president say this? But so far, there is no actual evidence of progress. We don't actually have a deal. Yet the president keeps propping the market higher and higher by simply dangling the prospect of a deal in front of us. So it's not just the Powell put that the markets now have. And of course, Trump wants to really exercise that put, right, by going right to QE. He doesn't want to wait until the market needs it. He wants to preemptively just go right back to quantitative easing. But the other put that's behind the market right now is the Trump put. And the Trump put is all about the trade deal with China. But I don't think the Trump put is an actual deal, although that is, really the put. But if Trump actually has a deal, then the put's gone. What keeps the Trump put in play is no deal with China. That way he can keep talking about how a great deal is imminent. And that's what keeps it going, because everybody wants to be in the stock market. I've said this. Everybody wants to be in the stock market when the deal is announced, because everybody is convinced that the deal is so good for the economy and so good for the market that they want to be long the market when the deal is announced. Now, Trump knows this. He knows the markets are anticipating a deal, and they're worried about what might happen if there is no deal. And so Trump wants to continuously tease the markets about how great a deal is and how a deal is imminent and how much progress we're making. But I also think, just like when it comes to quantitative easing and how Trump knows that we're in a bubble and he simply wants the Fed to be preemptive so that we can postpone the day of reckoning, or again, he wants to lay the foundation for being able to blame the recession on the Fed rather than anything he's done. I think he understands the Trump put. I think he knows that the worst thing he could do for the markets is to announce the trade deal. Number one, because of buy the rumor, sell the fact. But number two, he has hyped this deal up so much, there's no way whatever deal we get is going to live up to the expectations, right? You're supposed to underpromise and overdeliver. Well, I think when it's come to a trade deal, he's promised everything. He has promised so much, it is a certainty that whatever delivers is going to disappoint the market. So the best thing Trump could do is never deliver anything. Just keep the trade deal in his back pocket. Maybe if the talk of a trade deal stops working, right? If he can't keep the market propped up by talking about how a deal is imminent and how great it's going to be, if that stops working and the markets are tanking anyway, then maybe he can actually pull the deal out of his back pocket and play the card at that point. But at this point in time, as long as he can talk the market higher by promising a deal, he has absolutely no incentive to deliver a deal which he knows will disappoint the markets, which he knows may well be sold as a buy the rumor, sell the fact, and which he knows means that the Trump put would have expired. Now, looking at some of the other markets and their reaction or lack thereof to Trump's call for more quantitative easing and rate cuts, some people might have thought, well, the dollar's going to get killed if Trump starts talking about why we need QE, or gold's going to take off, right? I mean, obviously, if we have QE, that means gold prices should go up. Well, the price of gold really didn't react at all. I mean, gold was pretty much unchanged. I think maybe slightly lower on the day, 50 cents. The dollar index was pretty much unchanged, maybe a tick or two firmer on the day, still above 97. So really no reaction to Trump's calling out the Fed and advocating quantitative easing, which probably means that at this point the markets are ignoring what Trump is saying when it comes to monetary policy because they still believe that he has no impact on it. They still have some confidence in the independence of the Fed, and they still believe that despite what the president is saying, that we're not going to go back to QE. And in fact, maybe some people think that now that the president has actually publicly called for QE, it actually makes it harder for the Fed to do it. Right now that the president has actually said that he wants a rate cut, well, it makes it harder for the Fed to deliver a cut without looking like they're simply doing the president's bidding. If they want to preserve the illusion of independence, then I guess they have to, do the opposite or not immediately do whatever President Trump claims they should do. They're saying they're data dependent. Now, obviously, if they understood that this is a gigantic bubble or they admit it, the data is only good so long as the air is in the bubble. But as the bubble deflates, as higher interest rates start taking their toll, then the inevitable relapse into recession is there. And of course, once we get to the next recession, it's fatal because I think at this point, there's no way that the government could try to revive the economy without overdosing us on stimulus. Again, I think if we go back to QE4, and we will go back to QE4, it's not about if, it's just a question of when. When we do it, the amount of QE is going to be so large based on the enormity of the problem now, based on how much debt we currently have, how much more QE is going to be required. I think there is no way the dollar could survive it. I think we are going to overdose on QE, and we're going to kill the dollar, and then ultimately we're going to kill the bond market as well. We have a sovereign debt crisis, and we have a dollar crisis. And I know, again, a lot of people are thinking that the place to be is going to be the cryptocurrencies or Bitcoin, and I think it's going to be gold. In fact, Bitcoin is still above 5,000 as I am recording this podcast. We had that big rally from 4,000 to 5,000. The whole rally happened in about a half an hour. And thus far, Bitcoin has been holding on to those gains. The question is, how much longer will it be able to do so? My guess is that the rally was engineered to facilitate more selling. So I think people are trying to get out of Bitcoin and obviously generating some hype, getting some of the hodlers to start thinking about the moon again is a way to engender some new buyers to come into the market so that there will be some bids that can be hit. In fact, I read an article, some PR again, designed to stimulate demand. This one had to do with Brock Pierce, who I've met a couple of times, lives here in Puerto Rico. I think he's in San Juan somewhere. But apparently he bought a property, a house in Amsterdam. Dollar value of the house, I think, was about $1.2 million. I'm sure he paid euros because, the Netherlands uses the euro currency. But the article that I read basically said that Brock Pierce uses Bitcoin to buy a house. And the whole idea was, hey, now, you can use your Bitcoin to buy a house. But if you read the article, Brock Pierce did not use Bitcoin to buy a house. He used euros to buy the house. The person who sold the house did not accept payment in Bitcoin. It wasn't like there was an escrow and, Bitcoin went in to close the escrow. What happened was Brock Pierce went to this company, a third party, that loaned him money against his Bitcoin. So he was able to post a bunch of Bitcoins as margin, as collateral. And against that collateral, he borrowed money. And then he used the borrowed money to buy the house. So he didn't buy a house with Bitcoin. He bought a house with the money that he borrowed against his Bitcoin. The real story is that there is a financial entity that is willing to loan you money against your Bitcoin. And I look at this as a disaster waiting to happen. Now, the article mentioned that the collateral is double. So in order to borrow $1 million, you have to post $2 million worth of Bitcoin, and then you can borrow $1 million, and plus there's a rate of interest on the loan, like any loan, and you have to pay that. But my thinking is, first of all, if this guy Brock Pierce is really a billionaire, which is the way he's portrayed, I mean, why does he need to borrow some money to buy $1 million home? I mean, can't he just pay $1 million? And, I mean, if all of his money is in Bitcoin, so he doesn't have any money, I mean, can't he just part with a measly $1 million worth of his Bitcoin to buy his house? He really has to leverage that up. He has to go out and borrow money against those Bitcoins in order to buy that house so he can hodl those Bitcoins and not get rid of them and take all the added risk. And now he's going to pay the interest, which I guess he's going to pay the interest with Bitcoin as well. But the key is, let's say enough people did this. Let's say enough hodlers who wanted to buy houses or cars or whatever with their Bitcoin, they all sent their Bitcoin to these Bitcoin banks and levered against them. They borrowed money against them. What's going to happen? Well, obviously, when Bitcoin really starts to fall, right, as it falls, let's say it gets cut in half. Remember, they're loaning 2 to 1. So if you borrow $1 million, you're posting $2 million worth of Bitcoin. Well, what if the price of Bitcoin falls and it's only worth 1 million? Well, now there's a margin call. In fact, probably somewhere along the way, there's a mechanism where if you get close to that number, they just automatically sell your Bitcoin right into the market. Well, the problem is there could be periods of time where there's very little liquidity in Bitcoin. And so let's say the market is really collapsing, and now all of a sudden you have a lot of people who have borrowed against their Bitcoin, and now that collateral is losing value. And so the banks or these third parties have to now rush into the market and dump that Bitcoin to try to convert it into cash to cover their butts. Well, now what happens? What if there's no buyers? All of a sudden, the market can completely melt down as Bitcoin implodes because so many forced liquidations are taking place at the same time because of these margin sellouts. And then, of course, these companies could end up losing a ton of money because they may never be able to get the money back. So let's say that Brock Pierce's Bitcoins lose so much value that the lender is not able to sell them for the $1 million that they loan Block. Now, I'm assuming that these loans are recourse, that it's not simply, well, the only collateral they have is the Bitcoin. But my guess would be that if people are borrowing against their Bitcoins, that means they haven't really sold any Bitcoin. They're pretty much all in. Their entire net worth is derived of Bitcoin. And, if Bitcoin crashes, they're probably broke. And so it's probably going to be very difficult for the lenders to go after people when the crypto market implodes, when the people who borrowed their money were all in on crypto and now they're broke too. So this is a very dangerous business model. And to me, probably the main reason that Brock Pierce did this is not because he wants to hodl every single Bitcoin he has. This is probably a publicity stunt. This is probably designed to generate interest in this company to try to show that, oh, look, you could use your Bitcoins to buy houses and to try to mainstream Bitcoin and get more people to think about Bitcoin as money, just like any other currency, to try to generate interest in Bitcoin itself, not just in the idea of borrowing against your Bitcoin and generating fees for the companies that are organizing, making these loans and are generating or earning the fees, but just in general to help tout Bitcoin to try to sucker more people into this gigantic Ponzi. Anyway, in closing, one thing I wanted to mention, I'm looking at my YouTube channel, and I noticed that I'm getting close to 250,000 subscribers. I'm almost at 249,000 subscribers, so almost 250,000. I guess that's a milestone, but still, in the scheme of things, I mean, that's not that many people listening to my YouTube channel. Now, I understand I get a lot of people that now listen to my podcasts on just on iTunes or on Stitcher or on Schiff Radio. So I have a much bigger audience than is just what's on my YouTube channel, because I've only really been posting my podcasts. I haven't been doing the video blogs like I used to, and I haven't been posting as much content on my YouTube channel. So I suppose there hasn't been as much reason for people to just subscribe to the YouTube channel. But if you're not currently a subscriber, subscribe. In fact, if all of my subscribers, if every one of my subscribers got 3 friends to subscribe, right? Well, then I guess I would be at a million, because I'd get another 750,000 subscribers. But what I am thinking about doing is maybe doing some live content on my YouTube channel that would be in addition to the podcast stuff that I could do. Maybe I'll do some Q&A or some things like that. I don't know if it'll be kind of impromptu or things that I'll promote in advance, but I think that whatever I'm doing on the channel, I think the only way that you're going to know that I'm doing it is I think you get an email or something if I'm doing something, right? If you're a subscriber to YouTube and all of a sudden I'm doing some kind of live event on my YouTube channel, in which case you'll be able to see me as well as hear me. I think the way that you'd find out about it is because you're a subscriber to my YouTube channel. So one way to make sure that if I do start doing that, that you are immediately informed, that you don't miss out, is to subscribe to the YouTube channel now, so that you will be made aware of anything that I do that is just YouTube and that is not part of the podcast.